Hello, I'm Piyush Dave, a fintech professional, and today I'm going to discuss one more algo trading strategy that basically called as a smart range breakout. So, range means what? There is a upper value, there is a lower value. If the upper value breakouts, we will buy the share, and if the lower value is breakdown, we will sell it. But there is a problem with these breakouts. There are a lot of fake breakouts come in the market. Now, due to that, there is a possibility that you might lose in the market. So, I'm going to show you where is a smart way to find out this breakout range. And we are going to use a dynamic volatility method in this. When market is calm, that means very small movement is there, we will tighten the price band. So the quick reaction will come. And if there is a volatility is high, very high, then we will widen the band so that the false signal will not come. And this we are going to do with the concept of ATR, average to range. It measures the live volatility of the market, and it basically calculate ATR continuously. So my algo is going to calculate this ATR continuously in each price. So at the start, first we will collect the 20 readings. 20 readings means 20 price difference from the market, and then this algo will start. We have added one more thing in this, and that basically the padding effect. What is the meaning of padding effect? Now this padding will help us to get this smart range. So I'm going to tell you how this padding will be calculated in further discussion. So let me show you first what is happening step by step. And then I'm going to show you the simulation also, how this trade take place in a live changing market environment. Okay. So first part is we will collect the 20 price from the market, and we will set the upper boundary and lower boundary. That means highest price of the 20 price and the lowest price of this 20 price. So upper boundary and lower boundary is been set from the market movement. Once we do that, we will try to calculate the ATR, that is average true range. What is the meaning of that? So suppose the first price which we get is 1000, and the second price which we get is again 1000, and the third price which we get is 1002. So now the first, there is no difference in the price. You can check this. 1000 minus 1000 is 0. Then there is a change in price is 2. But the ETR will be 0 plus 2 divided by, we have taken 2 readings. So that means 2. So this is going to be 1. The ETR is 1. So the difference between price will be calculated first. So the difference is 0 here. Then the difference is 2 over here. We will add this 2 price, divide by, we have taken 2 readings, so divide by 2. So we will calculate the ATR as 1. Now if the ATR is certain range like 2 up to 2, we can consider it is a calm market. And if the ATR is above 5, 6, 7 or up to 10, we consider that it is a volatile market. So now first we will calculate the ATR. And now this ATR will help us to understand whether the market is highly volatile or calm. Now one more thing which we are going to add in this, and that makes this range as very smart, and that is adding a padding. So padding is ATR multiplied by multiplier. So ATR we have calculated from the 20 price which we have collected from the market. Then we will multiply with some value, and that basically called as a multiplier. And the ATR multiply by multiplier is called padding. Now ATR is, suppose we have taken the ATR as 1 from the market. The multiplier we have assumed at 0.5. So the padding will be 0.5. Now how the upper band will be calculated? The upper boundary means highest price from the 20 price. Lower boundary, that means lowest price from the 20 price, plus the padding. So upper boundary plus padding lower boundary plus padding. This will give us the upper band and the lower band. Now you might be wondering why this multiplier is been capped at 0.5. So let me explain you that also. If we keep this multiplier is very small, the band is very tight and false breakout may come. And if we keep this value as 1, the band is too wide, the late signal will come. So we need to basically take the value in between 0.1 or 1. So that's why we have given the multiplier as 0.5. Now this will help us to get the balance, the middle ground between the tight band or the wide band. Okay. Now once this range is locked, the upper band and lower band is calculated. We will wait for live price from the market. Now if the price is above the upper band, we will buy. If the price is below the lower band, we will sell. And if the price is within the range, it will wait patiently. I have tried and tested this. I keep on running this kind of algo in my system for 8 hours, 10 hours. I keep on checking the performance and then I come and record the video. Now it works beautifully. I run it almost more than 6 hours. So it works very beautifully and it book profit many times. Now, what I have done in this, I have kept the number of shares which is going to buy or sell as only 100. And the profit I'm booking very small profit, that is 0.5%. That is, we are taking the capital is 1 lakh rupees. So we're going to book the profit as only 500 rupees. And once the profit has been booked, we will exit. Again, the price will be collected. Again, the band will be calculated and the trading again starts. And I kept a loss as 2% also so that we can protect our capital. Now you might be wondering why the loss range is too high, because major time it might come from loss to profit statement. So algo we need to give some bang of extra, but still we are protecting our capital with by keeping this. Now if this algo is continuously running and suddenly there's a huge volatility come, and if there's a 5% of total capital loss, this algo is completely come out and stop. Every time it collect the signal, and once it collect the signal, it clear the previous data and again start working on the same cycle. In short, this is the best way to work with a logic of what? Smart range. It works with the logic of volatility. And one more thing, it basically avoid all the kind of noise which is coming in the market, like price noise I'm talking about. Now let me show you how it actually work in simulation environment. So this is the exchange file. This file is going to change the price continuously. I have no control over it. So this price is continuously changing. So I've coded this in a way that the price is continuously updated from the market. Now I have no control over the change in price. This price is updated and saved into this JSON file, and my algo is going to fetch the data from this JSON file. Now I'm going to run my algo. Okay, now I keep both the file together so we can observe the change in price market as well as we can observe how the algo is behaving. So now this is change in price. I have no control over it. I have only control over this. So this change in price is so random in nature, like what is happening in the market. The buy and sell, the buyer and seller are basically what we can say following each other, and the price is continuously changing. So now the ATR is been calculated. You can see, you can check out this. The ATR is been calculated continuously with the price. Okay, 20 price has been collected, and you can see the ATR, final ATR, the padding which we have added. Okay, now this was the upper range, lower range. You can see the upper range and the lower range. and we have added a padding also. So you can see the range which has been given is a smart range. Okay, you can see here the range has been breakout and we have taken a sell signal also. So the range has been breakout, we have short the equity and even we have booked the profit here. Now once the profit has been booked, it will start again collecting the price so that the new ATR can be calculated, the new range can be calculated. The algo is so fast, it keep on doing the calculation without any emotions. That is a basic requirement of the trade. So it has no greed, it has no fear, it works with a mathematics, it works with the rules. Now whatever rule says, it works with that. So now again we have got the upper range and lower range. The channel has been locked and now it is waiting for price to break out. Okay, so current price market has been noted down over here. You can see this is my upper range. Okay, 1004. Once the price go up, then only this uh, trade will happen. Otherwise, it will not going to happen. So we need to wait for either it should go down of 988 or it should go above 1004. Okay, I have added one more thing here. If I want to stop this algo anytime, I have put one control in my hand. If I press that button, automatically this algo stop and it will tell me what is the profit and loss statement. Okay, so currently we are in a profit of 600 rupees. Okay, one cycle it is being taken place. Again, it's waiting for price to either break down on a lower side or upper side. So until it breaks, it is not going to trade at all. Now this is a smartness of the algo. The main advantage is it won't work until the actual mathematics what we have designed take place. Okay, so still the price is in the range, so it's not giving any kind of breakouts. And one more thing, I have added one more part here. After every 100 second, it is going to tell us the realized or booked profit and the total money which we have currently. Okay. Okay, the price is in breakout. Okay, we have taken a long trade. You can see the price was above 1004. So the long trade has been taken. Okay, we booked the profit. Great. See how fast it is working. How fast it is working. Again, we start collecting the price from the market. So now currently we are in a profit of 1300 rupees. See, you must have the discount broker to work with this kind of algo. Only STT we need to pay to the government. We have no control over it. Whatever tax is been charged, we have to pay. But if there's a discount broker, then only this could able to possible for you. So again, we are collecting the price from the market. The ATR you can check out. And once it is going to give us again the range with the padding. Okay, everything has been calculated so fine way. Okay, we have the range. Now this range is quite large, almost the range is of 10 rupees, we can say. We will wait for a breakout. Okay, breakout already happened. Okay, we are above this price, the breakout has happened and it has taken the long position. Okay, currently we are in no profit, no loss. Okay, we are in loss currently because the price is below the value. After 100 seconds, it will tell us the realized uh, profit or loss. Okay, the unrealized part we can see over here. The price is again in particular range. We are in particularly in this, we are in the loss. Okay, unrealized is 0. We must go above this value. It will book the profit at 1027 or it will book the loss after 20 point of the loss. That means if we reach to 1002, so it is 2%. So currently we are in a loss of okay, 1300 rupees. So if it reach to 1002, it will book the loss. Okay, currently we are in the loss. Okay, it's about to break. Okay, we have stop loss triggered. Great part of the code is uh, everything is happening in front of you, and the best part is it has shown the profit, it has shown the trigger which has been happening at 2%, and again after profit or loss it again start collecting the price. And if there is a total capital 5% of the total capital loss, the algo is going to stop automatically. So we have the profit one time 600 700, and now the loss is minus 2100. Okay, so yeah, okay, we got the summary. So total loss in the 3 trades of the algo is 800 rupees only. Again, we got the range. So the price should go below this. Okay, we have short the equity. Okay, currently we are in the loss. See, the best two scenario we have seen. Now the worst scenario, if it comes, then it's completely fine. So basically the best part of this is it is happening, everything is happening in front of us. The short position has been taken and we are in loss currently. Again, I think it is going to trigger. The market should come below this short position, this value. Otherwise, it is going to book the loss. Okay, it's going to book the loss for sure. Stop loss trigger. Okay, two profit, two loss. It's completely fine. Again, start collecting the price. The best part of the recording which is happening over here is it is showing both the things because I have no control over it. I'm not only showing that the profit isn't happening in the algo. The algo is working with random price change. So this is a random price change. I have no control over it. And the best part of the recording which is happening over here is it is collecting the price. The trade has been happening automatically. If the breakout happen, it take the trade. Okay, long position been taken at 1004. Okay, currently we are in a loss of minus 2800. If this loss reach to minus 5000, the algo is going to stop for sure. Okay, we have taken a long position at 1001. See, the market is moving very widely, so that's why this kind of values are continuously changing. Again, the long position at 1004, and we are below the value. The worst case scenario has been in the recording, which we can say. So it's a fifth cycle, 2 cycle of profit, 2 cycle of loss. It's completely fine. 1004 at the long position. So if this reach to, if it reach to 984, then we have to book the loss for sure. So Algo is going to book the loss. But if price come above that, okay, it has not booked the loss. The prices again come up. It's working, it's trying. Okay, great. So we are in range where still the stop loss was not triggered. Okay, we are in lesser loss. Okay, now let's see. If we reach above 1002, then there might be profit. So it wait for 6 points to increase. Okay, 1002 was 1004 as a long position. Okay, currently we are in the loss of minus 2800. That's completely okay. We are still in control. So this runs for whole day. Like if your market runs for 6 or 6.5 hours, it runs for whole day. Okay, we are in profit. Okay, it should go above 1009. Then only it will going to book the profit. 1009. Because the long position which has been taken is 1004. Okay. So we are playing with plus minus part. The market should either go to the lowest value or it should go to highest value. Then only we will going to book profit or loss. Now I have one control over this. The control is if I press certain button, it is the algo is going to stop, and anytime I can come out of it. So here the algo is stop. I have forcefully stop it, and we have 4 trade which is happened over here, and the loss is minus 2800. See, the best part of this is long, short, all position has been taken. You need to run it continuously whole day. Okay, and we are protecting our capital with 5% of total loss for sure. So this way it works beautifully, protecting our capital also. And major time, when you run this for a whole day, there's a chance that maximum time it give a very good result. I hope this complete logic is clear to you. Thank you very much.